As my history teacher would say, you have to know where you've been to know where you're going. Hey, this is Struzyna with the Gunderman Group. Welcome back to another video. Thank you so much for checking this out. Today is part one of a two-part recap of the 2021 real estate year here in California and specifically the Bay Area. If you're on this channel for the first time, welcome. Thanks for being here. I put out weekly content to basically help you succeed here in the East Bay real estate market with tips, tricks, ideas, data, anecdotes, anything that I can find or think of that is actively helping people succeed here today. So go ahead and like the video, subscribe to the channel because you're not going to want to miss the content I put out every single Friday. So this video is going to be a little bit data heavy. There's going to be a number of graphs. There's going to be some stuff going on here. So that's why I'm splitting it up into two parts. The first part is this video. Part two will be ready in about a week, and I will link to it up here once it's actually launched and live. So I would recommend watching this one and then watching part two because it will work together seamlessly. So let's get into this recap. Where have we been in 2021 and what is that teeing up for us in 2022? First and foremost, this is obvious, everybody knows this, but interest rates are incredibly low. Historically speaking, they're about as low as they've ever been for any sort of sustained period. And there is talk of them going up, of course, but you can see here, they're really low, very affordable, around that 3% mark, plus or minus. I've heard of a lot of clients getting, well into the 2 range, even on a worst case scenario, 3.5%. That's an incredibly good long-term rate. I've been hearing about people getting cash out refinances at 3.5%. Which is really low for historic purposes. So that is something that is driving a lot of behavior. Because rates are so low, you can leverage your money, you can get cheap debt, and people are able to expand their purchase price, which is part of the reason why prices have gone up so drastically. Something else that I found to be really fascinating is that the median square footage in the state of California for a existing single family home has increased pretty substantially by about the amount of a home office starting during the pandemic. So people started to value homes differently. Pre-pandemic, people didn't want as big of a home. They wanted to be more urban, maybe even a condo or a townhouse, something that was lower maintenance. That was buying behavior, right? The hills, the larger homes, they were taking a lot longer to sell. They weren't selling for as much. Now, those larger homes with that 4th bedroom, that bonus space, that basement, whatever it is, the outdoor shed, the ADU potential, has a lot more value, and that is where the buyer pool has gone. So you can see the average has moved pretty substantially on the median home here in California. Same is true in the Bay Area, frankly. And one thing that I found so interesting, and I talked about it in a lot of my market updates throughout the year, which I'll link to that playlist up here, is that condos just got hammered right when COVID hit and have been really slow to recover. I've sold a handful of condos this year, and it was not the experience of the typical single family, multiple bids, tons of people doing escalation clauses going over ask. You get a handful, maybe 1 or 2, maybe you get none at all for a while. It's a really interesting stark dynamic, even for a really well located condo, because as you can see at the worst point in the year, in the last couple of years, condos decreased by 40 and 50%, whereas single family homes at the worst depression of the pandemic were only 30 to 40%. And frankly, I haven't seen the condos come back locally in the same way that the single family stock has. So then that asks the question of who's buying, because rates are low, so who's taking advantage of them? We have a decade high of first-time home buyers here who are purchasing, and of those first-time home buyers, there are majority of them putting huge chunks of money down, over 20% in fact. So what we're talking about is the higher net worth first-time home buyers who have probably been renting, who've probably been saving, maybe their stock options went crazy, maybe mom and dad gave them some down payment from their equity of their home, whatever the case is. Those are the people who are buying right now. And that is generally the millennial generation, my generation, the folks like myself who were renting for an extended period of time. They shed the student debt, stock options are vesting, they're settling into their careers, and of course they're valuing that work from home space again. So here you've got kind of a perfect storm of people who have the ability to put down large down payments, get a lot of leverage, or cheap leverage in debt because rates are so low, and a desire to buy a slightly bigger house. Interesting. So as a result, because purchasing power increased, because the millennial generation got out of renting and started to get into home ownership and had a lot of cash to leverage, prices really pushed up. And I'll get to this on the part 2 of the video, but construction has been lagging behind for decades. And so the existing single family stock has raised in value very substantially. I've done a ton of market updates about how certain neighborhoods have just taken off. Temescal being one that comes to mind, that traditionally was a pretty affordable option near Rockridge but got a similar vibe. It is now just almost as expensive as Rockridge because there's just nowhere else to be, because the existing homes are just the existing homes. There's not new homes, especially here in the Bay Area specifically. And if you want to see specifically on Oakland and Alameda, I did do a What the Money Bought series, which I'll link to up here, and you can see the trend over the last 4 or 5 years, what the average house at various price points look like, and what the values are of those properties. So I'll link to that up here. Go check that one out later. But as you can see, in the state of California, the median price point is pushed up really substantially as a result. So this isn't just a Bay Area thing. This is a state thing. This is something that we're experiencing across the board. And interestingly, I didn't know this until I did this research, but there are more single family homes for sale above $1 million than below $500,000. Fascinating. And when you think about what is going on there, you've got the people who want to buy, you've got the demand, you've got the cheap debt, you've got the people getting out of rentals and getting into home ownership who have the money, and they want to buy something, but there's not very much to buy, right? There's limited supply, and so they are fighting, driving the price up of that average existing home, because they want it now, today, as opposed to build it and wait, right? And that is causing that average, that median price point to push up substantially. So that is the first part of where we've been in 2021 in this real estate market. Make sure you like the video, subscribe to the channel, because I'm gonna put out part 2 to this next week, and you're not gonna wanna miss that. And of course, I'm gonna keep putting out weekly content in 2022 that helps you win here in the East Bay real estate market. If there's anything I can do for you, my information is down below. Thank you for watching, checking this one out. Stay tuned for part 2. And until then, my name is Struzyna with the Gunderman Group at Keller Williams Luxury International, signing off. See you on the next one.